I keep hearing that many people believe that the best investments are sold by large investment houses. But how many people do you know who got rich in the stock market? I thought so. Jason Hartman has helped thousands of people create real wealth with real estate. He has over 20 years experience, and his company provides the complete solution for real estate investors. Isn't it time you acquired property in diverse, growing markets nationwide for as little as $15,000 down? Don't let inflation destroy the value of your savings, stocks, or bonds. Real estate is the one investment that allows you to profit from inflation. For cash flow and capital appreciation, there's nothing else like it. Make your money work as hard as you do by building an income property empire. Go to www.jasonhartman.com and tell him Kerry sent you. You're listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1590 WPSL. If you're wondering where the markets are heading, gold, stock market, currencies, well, I always turn to Charles Nenner. And with me now is David Gurwitz, who's the Director of Research. David, how are you?
Hey, Kerry. Nice to speak to you again. I'm doing great.
Good. Well, so we're looking at the markets. The stock market up and away. Where is it?
It's been up and away, but it's getting, old in the tooth, as they say. Although this, as Charles wrote yesterday, this grinding could continue until the end of April. And he's got an S&P futures target. He's got a target. Doesn't mean he thinks it'll get there, but he got out of 1505 after having been long 6 months earlier, so he did very well. And the system doesn't have much higher targets, but it goes past. And he's got a target in the high 1580s if it goes, so he still has a buy signal on for people who want to be risky, of course, with significant stops that he places. And below those stops, he really sees we're going to have a bit of a correction for several months after this.
Right. It seems like that April date is significant for a number of different markets because, we look at gold and silver. It seems to be getting to a high, according to what you've said, around March 26th. It hits an interim high. Mm-hmm. Then it goes down until April.
Mm-hmm. Yeah, and it looks like he's been, again, as I've said before, he took everyone out of gold in 1900 over a year ago. So he's got a good track record with gold, and he's just saying, wait, we're getting close to buy both stocks and the gold itself, as well as the gold miners. But as I mentioned to you, let everybody who's listening right into the site, charlesnenner.com, mention that you heard me on Kerry Lutz, and you get a few months to look for free to watch, because, he doesn't want to take a trade until everything lines up, and it could be even pushed out into May to go long, but he definitely is planning on going long gold and silver with a multi-year up move, and his first target, with a target of 2,200 about a year and a half out.
Yeah, amazing. And I certainly wouldn't bet against him. Myself, I haven't done well trading short-term trends. Longer term I've got a better story, but hey, if he's right about these precious metal stocks, boy, you could really see huge returns on them because they're so beaten down. The actual metals themselves have held up pretty well, the prices, but the stocks have been decimated.
Let me talk about a few of the stocks. Let me read you some of this stuff so you'll see that we also covered the gold stocks for a number of the bigger investors and bigger clients. Like AEM, Agnico Eagle, sell signal continues as long as there's no close above 41.50. Daily cycles are down to the end of March. We don't anticipate a tradable low till mid-April. Barrick, sell signal continues as long as there's no close above 30. Eldorado, sell signal continues as long as no close above 10.10. Downside target 8.50. Gold Corp, sell signal continues as long as no close above 32. Cycles are down, but the bottom is late April. IM Gold, cycles bottom, close above 7.25 is needed for a buy signal. Newmont, we got out at 54. Short-term cycles bottom, a close above 41.60. Cancel sell. Pan Am Silver. These are all familiar to your listeners.
Oh, sure.
I know you don't mind me saying this.
I know every one of them myself.
I've
been in them at one time or another, most of them.
Continues, as long as no close, about 1775. GOLD, Rheingold Resources sell signal continues, as long as no close above 87. Cycles down low by the end of the month. Silver Wheaton, cycles are bottoming, close above 31.50 needed for a buy signal. You see, we give you timing, direction, and level. That's what we do. Yamana, cycles bottom, however, the sell signal continues, as long as no close above 1590. So the whole area has been down like he said it would be, and yet we're getting real close to the bottom. So those who are in should hold on, and those not in should be patient.
And those who are in, who are really frustrated, will sell right when it's about to go up. You know how that works. I
tell you one thing, Kerry. I think depression medicine is big in Aussie gold investors. I can tell you the ones I talked to that didn't listen to us. You know.
What was the call on Newmont again?
Newmont, let me tell you. Hold on a second. Let me get back. Short-term cycles have bottomed. So close above 4160 cancels the sell signal.
Today it's up, and I should give the date. I always forget to do that. It's March 21st, 2013. Newmont right now, today, is up 3.24%, 41.69. We don't know where it's going to close yet because it's right around noontime. But as we talked about Newmont, you have to love this company. The dividend right now, 4.2%. Right. So even if you're wrong by a month or two, you're still getting paid to wait, and you're damn close to his buy signal anyway. So maybe it'll go back down under 40. Maybe it won't. Who the heck knows? I don't know. You know better than me. Let me put it that way. One
way to play this stuff is to buy long-term calls, obviously.
Yeah, buy leaps, huh?
Yeah, so they're pretty cheap on all these stocks.
Mm-hmm.
That's one way to play it.
Yeah, I like it. And you get the leverage, and you don't have a heck of a lot of risk on the long end. So, because if you believe that these things are going to go up at some point, like I do, and maybe the juniors, the ones that are kind of sketchy, their business models are bad, maybe they're not going to survive. That's very possible. But Newmont and Barrick, whether you love the companies or not, are going to be around. And as long as there's an appetite for gold and for precious metals, those companies are going to be around, and they're making huge returns now, even at less than optimal metals prices. Right. So
we agree. But I think, what can I say? We agree with it. We called it. I think I mentioned last time one of our clients, I can't remember anymore, one of our richer clients went to one of the big funds that everybody knows, I'm not going to mention, that lost a lot of money in gold, very famous investor.
We know who he is.
Told him that Charles said, get out of gold, and he didn't listen.
Yeah. Well, when you get so big, sometimes...
it's hard.
Yeah.
Anyway, you want to talk about some of the other things?
Energy, crude, interesting, interesting there, what's happening with crude. But that's another case where it's going to bottom towards end of April, right?
Mm-hmm. Exactly.
Yeah.
Well, they're actually right now, short-term cycle's topping down into mid-April. It's on a sell signal. It's negative. Now, Charles still sees 1.25.
Mm-hmm.
Within a year. But just because he sees it doesn't mean people should, buy long calls right now. But that's what he sees. And as again, I think I've mentioned in the past to listeners, I don't know, when it was 147, I was sitting like 30 feet away when they were interviewing, and he said we're going to have deflation. They thought he was nuts. And it went down to high 30s and back up into the 100 range. So
I remember.
Yeah, it's going to get back up there again. So people should, nat gas, which is your next question.
Exactly.
He was waiting to short, and it went past what he thought, and he's testing the highs now, so it's short-term positive, but he doesn't think it'll go above 408, and the next high is March 27th.
Yeah, well,
nat gas.
And that's interesting because had a much colder than expected winter in the Northeast, and now that's probably brought some additional supply onto the market because there's tens of thousands of wells in the U.S. that are shut in. So, and they become profitable at different price levels. So at $4, a lot more of them become profitable. And, at least that's my take on it, that it will bring additional supply in, which will depress the price again.
Right. Always keep in mind, the traders call nat gas the widow maker. So I'm not sure to your listeners, when they're thinking what to play, maybe this is not the ideal restaurant they want to go to.
I think it's a bad idea because, the only way I see an individual playing nat gas is with MLPs, because you get the high distribution, and generally if the distribution is safe on the MLP shares, then you're going to be able to ride it out. Or you go midstream, or you go pipelines, where they pay high dividends, high distributions, and you've got a good chance of appreciation. And there's a lot of great long-term trends happening in nat gas now. It's just the price isn't one of them.
Right. Right, exactly. So let's go on. You got a few more minutes. You want to talk bonds?
Talk bonds a little bit briefly.
Okay. Yeah, bonds. Right now, actually, we're long bonds, and then we're long TLT.
Yeah.
We expect it to go up for several months, and we're preparing everyone to be short bonds the next 20 years.
Sure. 20-year.
Yeah, just like being long bonds since the beginning of the 80s was a great trade, being short bonds is the alternative trade. So your listeners who are all gold-focused, doesn't mean they have everything in gold. They have whatever they have. They do think about everything else like everyone does.
Sure.
So just like it's not so simple. I speak to clients all day, and I tell them it's not easy to go to sleep thinking you're going to short something for much of the rest of your natural life, and then you got to get up in the morning and watch the Heat play basketball. That at least is fun. You go to sleep going, I'm short, because most people think long. You know, but the reality is that's what's going to happen with bonds long term, is the gains to be made on the short side. Just not now. Be long now. And Charles has been begging people to be long bonds for the last 6-7 years most of the time, and not everybody listened. That's the case. But there's a 60-year bond cycle that I'll always repeat when you ask me, because it's easy to remember that the rates are low now, high in 1980, low in 1950, high in 1920, low in 1890, high in the Civil War.
Yeah.
The next high is 2040.
Yeah. And what does the cycle look like the rates are going to go up to?
Way past 12%.
Man, that is decimation for the world economy.
Listen to this. I'll use a sports analogy for those who are sports people. They'll appreciate it. For not, bear with me. Kerry and I always like to talk sports. You know a commercial with Bird and Magic years ago? They played horse, and one was shooting like H and O was shooting off the moon, bouncing here and then going to hoop.
Yeah.
You remember that one?
Yeah, I remember.
So I wanted to talk the next 20 years in stocks and bonds in 2 minutes. Ready?
Yeah.
Basically, all right, everyone's thinking this guy's crazy, but that's okay. I'm used to it. Stocks are down. Dow goes to 5,000 by 2020, right? 2018, Charles mentioned, but he really meant 2020, 2021. Not straight down. It's going to go down, bounce, bounce. Everyone's going to buy dips. At that point, when everyone is depressed and not happy, and social unrest and rates are going up too, the stock market will have an incredible rally while rates are going up. And you're going to have, he thinks, the biggest rally in history starting in 2021 for the next decade after that.
Right.
So we will have complete opposites. Bonds will be going down, then stocks are going up. But for the last 30 years, if you bought stocks and bonds in 1981, they both went up in value because rates came down for 30 years and the Dow's gone up 14 times.
Yeah.
So there are times they go in tandem. There are times they go opposite. Just like gold is not always inflation or deflation. All the assumptions people make about things, Charles questions them and says, well, that's what you think. It's not always the case. Everything operates independently. That's why he doesn't like to say because gold does this. Silver generally matches up with gold, but just because gold does this doesn't mean the currency does that, or stocks do that, or bonds. Yeah. It's not always direct correlation. That's
There's
why
separate
cycles
markets.
are so important.
Yeah.
When cycles for Apple topped in September, and Charles said everyone buy puts at 700, 80% of analysts stayed long.
course. They always are on the wrong side of the
Always.
trade.
So
always.
So I'm saying this to the context of listeners when they're thinking about just not stocks, but everything we do is all based on essentially one algorithm with different pieces that do price and timing, but direction, just cycles, and it tends to work pretty much almost all the time. And so if we're saying gold is close to bottom, probably is. And if we're thinking bonds are close to a top, probably is. And if we're thinking the dollar will top next year, which we didn't talk about, and the Chinese will probably sell off their bonds because rates will start going up, and the dollar denomination they're in or it will be going down, so they're going to get hit twice, and that'll start triggering a lot of bad stuff, which is why you want to be in TBT way before then. Right. This is the stuff we write about. This is what we report. So, again, I'm mentioning all you people, write in, mention you heard David on Kerry's show, charlesnenner.com, and you get a free.
Excellent. Well, this goes back to the old quote from Ike when he said, things are more like they are today than they've ever been before. and that sums up Wall Street. Whatever is happening now is what's going to happen until it changes. And then when that's happening, that's what's going to happen. And they can never look past the veil to see what's really going to happen.
And here's the question. Is that only in Wall Street, but is it in politics?
It's life.
Everything else? Right.
It's life. And, my thing, I wouldn't say I'm a worrier, but whenever anybody tells me how great things are, I always think, well, what can go wrong? What will go wrong? And when they tell me how bad things are, I try to look, and it's hard not to get wrapped up in pessimism, but what I think you should look at and what you should try to do is say, all right, everything is going wrong. What can go right now that everything's going wrong? And then you won't get locked into the paradigm of normalcy that whatever happening now is the norm, and you don't have to think about changes coming down the pike, which will always be there.
Very deep stuff as we head up to Passover and Easter.
Yeah, you got it. Well,
stuff.
I think you need to think about these things.
Oh, for sure. It's not, but that's part of what Charles is saying, that the markets reflect our deep psychological sense, and it's why they're affected by sunspots. The sun affects the water in our bodies and the sunspots, and that affects our mood. And it does track with the Dow very much, the sunspot cycle.
Oh, so for sure. Documented.
But, how many people think about it and try and incorporate it? It's not a major thing he does, but he still thinks about it. War cycles, bottoming, when we see all sorts of stuff indicating that. He called that 2 years ago before anybody else mentioned it.
Right. So,
anyway, Kerry, I appreciate you taking the time for me again. As you always
we
do.
always have time at the Financial Survival Network for you, David. You know that. So
I appreciate it.
Hey,
and your listeners again, welcome. Please write in, charlesnenner.com and mention it, and we'll give you a free look. And we have a bunch of different subscription models, and someone will speak to you afterwards.
Hey, and I look forward. I get your newsletter twice a week. And the first thing I do is I go to Gold and say, is it time for gold yet?
No.
And he's been spot on. So from an intellectual standpoint, I find it hard to believe that it could bottom again in April. I just don't believe it. But from a past experience with Charles Nenner, his prologue, I take it very seriously. But my inclination is to say it can't go down again. Not with Cyprus and falling apart of the European Union and the banks and all that. It can happen, but yet I realize that it can.
Yeah, definitely. Just the one thing I tell investors, don't think because the hip bone's connected to the thigh bone, investing works that way.
Yeah.
Right?
Exactly.
Who would have thought the markets would have gone up so much, and who would have thought nat gas went from $6 to close to $2? And who would have thought a lot of the stuff that's happened? So why do we assume now what we think is going to be correct?
Yeah, and I love natural gas, but not to play the market on it because it's Russian roulette with half your chambers filled. Yeah.
And the U.S. will be energy, efficient and independent not too long from now, and that changes all sorts of things.
Much faster than anybody out there is predicting. They're saying 2020. You know what? I think it's I know people in the industry. It's nothing like it's portrayed in the media, this industry. It's way, way different. It used to be when you were a wildcatter, and I don't want to keep you going too long, but when you were a wildcatter, you had a 1 in 100 shot of striking oil.
Right.
It's not like that anymore. When you drill a hole, you have a 90% chance of hitting oil, and oil in commercially viable quantities. That is something I have never seen written about any place other than, 3D seismology has helped improve our efficiency drilling wells. Nobody has said it was 1 in 10, and then 20 years ago it was 5 in 10, and now it's 9 in 10. That makes a huge, huge difference. So anyway, enough of that. So it's charlesnenner.com, Nenner. And like I say, I love the newsletter. It's easy. In 3 minutes, you can pretty much have a bead on every relevant market in the world, and then you figure out what to do about it.
Right. We leave that to you.
All right. And you can always find on my interviews with David on financialsurvivalnetwork.com. Sign up, get the free newsletter and the special reports. And David, happy holidays. We'll talk to you again soon after.
Fantastic. Great. Thank you. Thank you all for listening.
When it comes to buying physical gold and silver, Regal Assets is the place to go. Did you know that you can use your existing retirement plan to invest in precious metals, and it's 100% tax-free with Regal Assets? I hope you're seriously thinking about using precious metals in your retirement plan to help you beat inflation. It's so simple to use your existing IRA or old 401k to set up your precious metals retirement plan. Request your free investment kit today. It's so helpful and informative that it was recently featured in Forbes and Smart Money Wall Street Journal magazines. Get the latest info by calling toll-free 855-678-6620. That's 855-678-6620. Or visit regalassets.com and use the code Lutz. You'll save the setup fees and a whole lot more at regalassets.com.